Joining us now is Steve DeSanctis. He's the head of U.S. small cap strategy for Bank of America Merrill Lynch Global Research. Steve, welcome to Bloomberg News. Good to see you again.
Good to see you, Mark.
Steve, is now the time to invest in small caps?
Well, you know, I'm a little more biased. I would say there's always an opportunity in the small cap market. I think you have to be a lot more selective. I think it's going to come down to individual names and individual sectors, as opposed to broadly seeing, as you mentioned earlier, you know, an 80% recovery in small cap prices. I think a lot more on the selectivity side.
Talk to us about which sectors you like.
You know, we've been more on cleaner balance sheets, still looking at the credit crisis as something that's going to be an ongoing problem that's going to dog us here. And so we've tended to like technology. About 26% of the market cap of the group sits in cash. Estimates have been moving higher. I think even in technology, you have to be a little bit more selective. Industrials, another area that we like, cash on the balance sheet, overseas exposure. Energy, we think, is another opportunity where oil prices are going to go higher. And then lastly, healthcare with the proposals by Washington. The stocks have really struggled. And so on a valuation basis, it's a group that looks really cheap to us.
Steve, talk to me about healthcare, because, you know, I was talking to Jack Ablin of Harris last half hour, and that healthcare summit yesterday. Do the prolonged discussions give you concern at all?
It definitely does. It's just something that's kind of, you know, we don't know what the outcome is ultimately going to be. And so I think when you look at earnings estimates, you know, that's going to impact earnings estimates going forward. Right now, what we've seen, though, in healthcare is that the estimates have been heading higher. Again, very good balance sheets. The stocks, I think, are relatively attractive on a valuation basis, but just, you know, the overall you know, the issue with Washington really does present a dark cloud on the group.
Steve, talk to me about what happens if nothing gets done on healthcare. What if there's a stalemate? What are investors to do?
I think, you know what, it's going to come down to the fundamentals of the companies. And really what we've seen inside of healthcare the last couple of quarters is that the fundamentals have been good. Earnings and sales growth has actually been holding up better than other groups. Again, the valuations are attractive. So I think you may have a rotation back to that group if it's perceived that, you know, we're not going forward with the proposals.
Financial sector. I'm looking at a chart of the S&P 500 today. Financial sector's one of the leaders there, up about 1/3%. You like financials as well?
I don't, actually. On the
I'm
small
sorry.
cap side,
my apologies.
No, that's fine. On the small cap side, it's a little different here, where I think a lot of the smaller banks are still going to have to raise additional capital. That tends not to be good for stock price performance. I think if you look at ROEs, they're very low. And so where the multiples are now, I don't think they're all that attractive. And then, you know, you wake up on a Monday morning and you'll see that a handful of banks have been closed. And so I think that's an area that's going to really kind of dog the small cap market, and it's going to be an area that I think is going to continue to underperform here.
Steve, you remain overweight infotech, and you note that information technology has been a laggard this year, even though they had a strong 2009. What's going on?
I think it's one of it is the fact that it had such strong performance last year that I think it's giving back a little bit of the performance, and people are rotating into other areas. I think you've got to be a little bit more selective. Last year, essentially, all of technology went up, and I think, you know, there are some pockets now that may be showing a little bit of signs of weakness, and so you got to be a little bit more focused in tech. I think it's more the fact that it had such a big move last year that I think, you know, you're starting to see money rotate out of tech into other areas just to try to, you know, to balance out performance.
Yes, it's kind of like the sports analogy, kind of hard to do it twice in a row, huh?
It's a little bit more challenging, but I think, you know, ultimately when we start to see the fundamentals come through, I think that's what, I think this is a group that's going to get paid on fundamentals.
Steve DeSanctis, Bank of America Merrill Lynch, joining us from his offices in New York.